You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody, that music means it is time once again for the old OB, a.k.a. the Option Block, a.k.a. the kickoff to our broadcast week here on the old Options Insider Radio Network. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting theoptionsinsider.com, a place to go in between episodes. I know there's a lot of episodes of shows hitting you throughout the week here on the network, but if you want, while you're listening, maybe in between episodes, head on over to theoptionsinsider.com. Unusual activity, hot options reports, you got all sorts of fun stuff, all the earnings move results stuff you guys love, and a whole bunch more over there at theoptionsinsider.com. Don't forget, I should say, if you're out there listening, you like what you hear, make sure you keep those reviews coming on your platform of choice so new folks can continue to discover the goodness that is the network. And speaking of the goodness of the network, you know, we're kicking off our broadcast week here. I like to do things a little bit differently to get the ball rolling, get the juices flowing. You guys certainly seem to be enjoying it with your legion of suggestions for shows. So here we go. Let's dive onto the breach once again. It is time to kick things off with our 80s theme song guessing game.
I bet we've been together for 1,000,000 years.
And I bet we'll be together for 1,000,000 more.
Oh, it's like I started breathing on the night we kissed. And I can't remember what I ever did before. What would we do, baby, without us? What would we do, baby, without us? And there ain't no nothing we can't love each other through.
that's about as 80s sounding as it gets. The soft synth actually almost sounds like a late 70s type of thing, but it is an 80s show. I can indeed confirm. In fact, one of the bigger ones you guys are probably familiar with. Let's go around the horn. Let's go out to our friend holding down the NASDAQ volatility hot seat. None other than the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. By way of Carmen Lion Capital, A, Mr. Greasy Meatball, welcome to the program. And then B, can you name that tune, sir?
Well, let me start by saying how great it is to be sitting in this seat today. I love this NASDAQ hot seat.
It is a massive throne, sir. Are you sure you can handle it?
Oh, I'm feeling great. I'm feeling great. I do, in fact, know that song. I knew it right away. I believe it is a painting that is being painted at the open of it.
Yes.
And it stars a person who loves Ronald Reagan.
Yes. Yes, Family Ties. Well done. One of probably the first and last shows to have a true hardcore Republican as one of the main leads. It's a rare thing. You don't see that too much in television programming anymore. But yes, Family Ties, you are correct, sir. I had a feeling you might be able to go to the well for that one. Just listening to that again, it reminded me, oh, wow, that's a pretty 80s style theme out there. All right, let's also go out to our other old friend, the uncleest of Mike's, Mr. Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, A, welcome back to the program. And B, you can be honest with us. Did you know that theme song, sir?
Yeah, I did know that one. That was one of the I knew that one right away. It's weird because on the reruns, they don't play the full theme, so I recognized it right away. But then when they started singing the words, I'm like, well, wait, am I wrong on that? But then once they got to the chorus part of it, I definitely knew it. So, yes, I did. And old Alex P. Keaton, Michael J. Fox playing them. Yeah,
I do have to admit, the theme song in the modern era of Netflix and streaming is kind of a dead art. I mean, you see most shows now, it's like, right into the show. There ain't no time for credits anymore. It's a lost art. It used to set the tone for the show. You knew what you were getting, a bit of branding. All of that kind of gone now. But you know what's not gone is the rest of the show, so let's head right into it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is going on out there, and it's kind of a mixed start to the week, I guess, to be charitable. Depends where you're looking. NASDAQ actually still fighting the good fight, still struggling to stay positive. A little bit less positive than it was earlier in the session, but still positive, up about 0.25% right now. The other major indices trending toward the red. Got S&P off almost 0.33%, and the Dow closing in on 0.2% to the dark side. So some mixed reaction, obviously, to some of the vaccines coming out, but also, of course, the dire pandemic news, which continues to get more dire here in the U.S. So a lot of a mixed bag going on out there. A lot of that weighing on these markets, which are, of course, coming into the week at pretty much at or around all-time highs. So we got VIX coming into showtime at about 21.5. It was up slightly, up about 0.25 from our last show. We'll see how long it can maintain that pretty much unched level there. VVIX, which is the volatility of volatility, at about 105. So pretty similar to our last show. I think it's about 0.5 handle lower than it was this time on Thursday. VXX, the product you guys like to fade, not fading right now, at about 17.25 coming into showtime. That makes it pretty much unched from our last show. So not a lot of juice coming out there. And VolQ, the newest addition to the volatility suite out there, actually up a little bit, up about 0.5 handle to about 23.25 coming into showtime, which is interesting because, of course, NASDAQ also one of the few major indices that's actually up on the day out there. Since we're talking NASDAQ and volatility, let's go on out to the NASDAQ volatility hot seat. We are joined by our good friend, the Mr. Mark Sebastian. Mr. Meatball, sir, what is lighting up your tape out there in this somewhat mixed start to the week, sir?
Yeah, it's not the most exciting day, but I would point out that the airlines are moving a lot, and some of the NASDAQ stocks look pretty hot. Apple is flying today. There's a ton of volume in Apple options. But I noticed that the airlines are up nicely, notably AAL, but Delta's green and UAL is green, and even Spirit's down, but the airlines look good, and volume relatively light. There was a pretty strong outage this morning and on two different brokers, which is affecting volume and is one of the reasons why things may seem a little slow right now.
That's certainly been a recurring theme throughout the year. It's kind of pick your broker. Some have been impacted more than others out there, but it definitely has been a recurring theme, the outages out there. We've heard from you kind of across the board. It seems like a lot of you doing the Robinhoods and others have maybe been more impacted than others, but it is pretty much across the board. Most of the major brokerages have had some sort of outages. Again, we demand full access to our capital, but these are also unprecedented years. So maybe one or two outages here or there, slight outages can maybe be forgivable. Longer term ones, like we've seen at some of the other outlets, maybe not so much. But yeah, these are interesting times. Speaking of interesting times, I haven't had a chance really, Mr. Meatball. We've touched on it every now and then, but I haven't really had a chance to pick your brain in depth about your thoughts on this latest edition to the old volatility landscape, a.k.a. VolQ, a.k.a. the straight-up just the facts, ma'am, at the money volatility of the NASDAQ 100. I know you look to a lot of VIX and a lot of large-cap S&P volatility. What are your thoughts on VolQ and kind of where it fits in the volatility landscape or indeed a volatility portfolio versus some of the other vol products, sir?
Well, let's talk about at-the-money volatility. And, when you look at what makes the NASDAQ 100, right, the NASDAQ 100 is really 10 stocks and then, a few other stocks that are add to it. But the NASDAQ 100 is, going to be Apple. It's Amazon. It's Microsoft, right? It's Tesla is now the fourth largest component of the NASDAQ 100, followed by Facebook. And then really, you could argue that it's the fifth largest because the two Googles add up to about 7.5%. But let's do some math here, right? Apple is almost 13% of the NASDAQ 100. Microsoft is 10% of the NASDAQ 100. Amazon is almost 10% of the NASDAQ 100. Google is over 7.5%. And then Facebook and Tesla amount to about 8.5%. So, just doing some shorthand math, 13 plus 10 plus 10 plus 7.5 plus 8.5, and you're talking what amounts to be 6 stocks are 48% of the NASDAQ 100. If I add in NVIDIA, which is the next one, you're now over 50%. All right. PayPal, and then it's not really, you don't have kind of a traditional old line business until the number 9 component, which is Comcast. Even Intel is now only 1.7%. And that was always a major thing. So let's talk about the trading in these names, in names like Apple. All right, if I just pull up Apple and I want to see where is all the volume of the volume that is taking place in Apple today is directly at the money. All right, Apple's trading around $124. The biggest, most voluminous strike is the 125 strike and the 124s with a little help from a few around that. If I pull up Amazon, very similar trading. Microsoft, very similar trading. And so when you look at VolQ, which hedges at the money volatility, it is really the perfect index for hedging your exposure to these names where the sentiment is not determined by way out of the money options or skew. The sentiment is determined by what's trading at the money. And so I think that NASDAQ has come up with a really usable, viable index for the products that really make up the NASDAQ 100. It makes a lot of sense. And as we head into earnings season, when a lot of the playing in these names is again going to be at the money, this index is going to do an excellent job, I think, of allowing the user to really get an idea of what do expectations look like for earnings season as a whole, or for some of the big NASDAQ moves when we have big allocations, right? We have a huge event that is going to be driven by the S&P 500 in about 2 weeks when Tesla gets added. Frankly, VolQ is probably going to give us a better idea of some of the volatility that Tesla is going to add market-wide than the VIX itself will, because VolQ is only looking at what's going on in that at-the-money trading. More and more, with options now becoming the dog and not the tail, right? For years, the options were always considered the tail and stocks were the dog. I don't think it's that case anymore. We're seeing more and more where the notional stock traded in the options market exceeds the actual stock volume that was trading. And that, I think, is the key to the use case for VolQ. And when they eventually get these VolQ options, I think they're going to go wild, because there's going to be so much use case for them as vol hedges on portfolios that are heavily concentrated in those stocks that I just talked about.
So much to unpack there. What an interesting, tumultuous year we are living in. You kind of just broke it down. 6 names accounting for roughly half of NASDAQ movement and vol out there these days. And of course, as you mentioned, so many of these are these new retail accounts and others that are just fixated at the money. That's kind of where a lot of the volume likes to play. So if you're measuring the vol and the impact of vol out there on these products, at the money certainly makes sense. This is kind of an interesting thought experiment I've been putting out to a lot of the people we've had in this hot seat. I want to get your thoughts on this as well here, Mark, because obviously VolQ showed up at the money. We just talked about the kind of use case for that in something like an NDX and in the NASDAQ-oriented names. Obviously, VIX incorporates at the money, but also some of the skew components as well, which I guess is a controversial thing depending on who you're talking to out there. So I'm curious for you. People look at vol products, they think of spreading right away. Spreading is the go-to use case. I want to spread NASDAQ vol versus S&P vol, whatever the case may be. So for you, when you're looking at spreading these two, I've said it before, they're not quite apples to apples, because one's straight at the money, one's straight at the money with a little bit of extra. So how do you view these as spread components? Are they apples to apples in your opinion? Maybe what's a better analogy if you have one over there? And then B, when you're looking at spreading these, what are some things to keep in mind as you're doing that?
So, interesting that, I think especially when Tesla gets added into the S&P 500, you're going to be looking at those same 6 names: Apple, Microsoft, Amazon, the Google twins, Tesla, and Facebook are going to account for about 25% of the S&P 500. So I think that you're going to see a lot of spreading between the two, between the futures. It makes a ton of sense to spread off kind of at the money risk using something like VolQ versus when hedging takes place. So VolQ is more a play on movement. What are we going to see? And VIX, I think, gives us a better idea of market demand for hedging. VolQ gives us a better idea of market demand for volatility and for gamma. So you're going to see, I think, a decent amount of spreading. I would almost say that VolQ is, apples to apples is not a good analogy, but they're of the same, they're the same genus, but probably not the same species, right? It's like a lion and a tiger more than it is an apple and a different colored apple. So they're both cats, but they both behave they're both going to have some similarities, right? You definitely don't want to get stuck in a small room with either of them, but they are going to behave very differently, right? Lions are pack animals. Tigers are not as much that. So you are going to see some spreading there, but the use case for spreading, I think, is a lot more narrow than you're going to see VIX used as the overall kind of portfolio hedge, and VolQ as a better event hedge. I want to hedge off all those earnings that take place on the same day. What am I going to do if I'm carrying that big basket of stocks right as we're about to have all those companies announce earnings? VolQ makes a ton of sense as a vol hedge on that. VIX is not going to do as great of a job on something like that. So I think that different use cases, there'll be some opportunities to spread when at the money gets really out of whack or skew gets really out of whack. So you're really doing more curve trading if you're spreading that than you are doing differences in the actual index volatilities.
And speaking of some of the interesting use cases for VolQ, I've seen a lot of people out there theorizing about different use cases for it, including our old buddy there, the once and future Dr. VIX, a.k.a. Mr. Rhodes, has been doing it over there on the NASDAQ site for a while. He theorized about using NDX and, of course, our old friend, the Rule of 16, to take VolQ and then extrapolate from that what is expected for a single-day move out there in the NDX, and then actually write, interestingly enough, one-day iron condors. Not what I expected from him, but one-day iron condors. And he actually broke down some data. He did it with data going back, I believe. He did it in the middle of this year, so it was data from April through June, which was kind of interesting. But he found interesting use cases for it, and actually putting on these iron condors, he found had what was his quote-unquote edge, because that's the thing everyone is out there looking for in the vol space. He found it worked out about 77% of the time in terms of the expected move coming the next day, falling within or below that expected range. He also found that looking at the different expirations that we have out there on NDX, doing it on Tuesday into Wednesday for the one-day iron condor. Kind of an interesting thing. It's not what I expected from Mr. Rose, but an interesting use case nonetheless. And other folks also theorizing on using VolQs to go out to the Qs directly, kind of interesting, and use it to pick your covered call strikes if you're looking at writing covered calls in the Q. So a couple of interesting and maybe different than you expected use cases for VolQ. What are your thoughts on those, Mr. Meatball? Either Mr. Rhodes' one-day super interesting iron condors in NDX, or using it maybe a little bit more traditionally to help gauge your covered call strike in the Q, sir?
I mean, I do think that makes a lot of sense. Here's kind of a use case I'm thinking about. All right, so Apple and Amazon and Google are probably, and Facebook and Microsoft are probably all going to have earnings the week of January 26th, potentially on the same day. There will, next week, we will have triple Q options that take advantage of that week. I'll be able to go to the triple Qs and buy let's say an at-the-money straddle for that week. And so imagine a scenario where I want the gamma, I want that movement, but I don't want to have to work with the drop in volatility that we're going to get out of those earnings. I could potentially buy a basket of straddles in Amazon, Apple, Microsoft, or I could buy a straddle the week of in the Qs that week, and then sell a future, or if they had options, buy puts or put spreads in VolQ to then neutralize the Vega component of my straddle, and thus allowing me to isolate gamma. One of the things I always tell clients when we're dealing with risk is you can't. There's no way to just eliminate risk. But you can isolate risk to where you want it as best as you can. And the way I would maybe want to do that is I'd want to take the gamma, I'd want to take the straddle movement, but not have to deal with some of the Vega that's involved in owning a straddle. So that's something I see a real use case for VolQ.
Great stuff. Just a few use cases you guys can mull over. Send us your own. I'm curious to hear what you guys think in terms of it as an indicator and what you're using that for. There's a lot to explore, but we have to keep on rolling. Uncle Mike chomping at the bit to get in here on a day that is, depending on where you're looking in the NASDAQ realm, Uncle Mike, certainly an Uncle Mike type of day. In S&P, where you usually hang your hat, and Dow, maybe not so much. What is lighting up your tape out there on this mixed Uncle Mike day, sir?
Definitely a mixed Uncle Mike day, to say the least. So I think that you mentioned the S&P, so I'm looking at on there. The number that it seems like we're not able to get through, and by not able to, meaning Friday and today, is the 3,700 mark on the S&P. I mean, the futures did hit the 3,705 on the E-mini, but 3,700 seems to be the next key number, so to speak, that we're not getting through right now with the S&P. So that's something that I'm looking at. We are approaching a key number with things. Definitely the NASDAQ, the Apple is doing pretty well today. It's up over 1% with all things considered. And the Dow is still holding the 30,000 mark that we seem to hear about in the media a lot. Silver is up a little bit today, just over 2% on the day, which it's all in a day's work for silver in terms of movement. But the thing that I'm really watching right now, I think the focus for now would be the 3,700 mark in the S&P, just because of the fact that we're kind of waiting and seeing how the vaccines are going to get distributed. I have a neighbor who's a police officer. He actually got offered a vaccine, but my understanding was that they weren't technically approved as of yet. But so I guess they are putting them out now for certain high-risk people who are in a high-risk area. So that's something that we'll definitely be keeping an eye on. The vaccine news, the election news, the election is pretty much done. We still do have the 1 in 50,000 chance of Trump pulling something off with getting lawsuits and that type of thing, but I don't think anyone's really believing in that at this stage. But the main news right now, I think, is just where the vaccine's going to go and what it's going to do with it. So, obviously, just from the standpoint of being a good citizen, we hope that things go well with the vaccine and that this can really solve our problems in terms of getting rid of COVID. But the reality of it is that we do still have, even at best case scenario, we do still have about at least 6 more months to go before every American that can get it or that wants to get the vaccine can actually get it. And then the other part of this is that what we're going to have to watch with this is to see who actually gets it. In that if everyone is so afraid of the vaccine because it came out so quickly or they're concerned with the side effects and nobody gets it, then whatever hope we have in the vaccine, we will then have none. We just have to hope for herd immunity or something along those lines to solve the COVID issue. But from what it sounds like, if you look at where a lot of the problems come from in COVID, roughly 40% of the cases have come from nursing homes, and a vast majority of the cases have come from high-risk people. So I would think that people in those demographics would typically get the vaccine, and I think that could definitely slow the spread, but that remains to be seen. So we will see on that one.
Yeah, I was just on with my father and mother. They're, my dad's going to be 79 in January, and my mom is younger than him, but not by a ton. And they both have some health issues, and they're telling me their doctors are saying they're going to get their first shot in February. So, hopefully they're going to move with the speed to get that to people that need it. And I'm with you. It sounds like we're making some progress.
I think we are. And, what I'm really hoping happens, and I've stated on this show many times of my dislike for the two-party system we have in America in politics, but what I'm hoping happens, whether you're a Democrat or Republican, is that the political issue of this comes to an end, and that I understand on the one hand, personally, the need for small business, meaning if everybody quarantines, we don't have an economy. It just doesn't work. I get that. But on the flip side, from the tinfoil hatters that think this is all a government hoax, the doctors and nurses in the emergency rooms, at least around the ones that I'm seeing, none of them are saying this is all a hoax. So but on the flip side, the people that have small businesses, they need people out to survive, in that politicians are still getting paid, but the local restaurant owner is not. So folks, we need to work together on this one. And I'm really hoping that since the election is over, I know we still have the Georgia runoff coming in early January, and that's a big deal for if we get gridlock or not. But I'm really hoping beyond hope that the politicizing of the whole mask issue and the whole COVID issue comes to an end, regardless of what side of the aisle you're on. So I guess that's just hope for me, but we will see. And that's what's going on with what I'm seeing today.
Let's see what we're seeing out there with the major indices as well as some of the hot names you guys are trading out there. What's topping your lists? VIX kicking it off here on the index side, doing decent paper at about 214,000 contracts as of a few minutes ago. The ADV a little bit north of 500,000 right now, about 536 out there. So not a blowing the doors off day, but not a sleepy 5,000 contract day either. SPY at right about 1.5 million. The ADV has trended down out there a little bit. It's about 3.75 million. It was well north of 5 out there not too long ago out there. So SPY a little bit quieter out there of late. The S, 583,000 contracts. The ADV about 1.1 million. So a little right around half a day's worth of volume out there in the S. We'll see if that holds up. The Qs doing surprisingly light volume given the fact that they are the lone straggler in the green out there today. 449,000 contracts. The ADV 905 out there, which is interesting, a little bit off of the 1 million plus level it had out there not too long ago as well. And the small caps, at least through the IWM flavor, at about 275,000 contracts. The ADV 640. Check out the episode we just did with our old buddy Mr. Matt from ORATS over there on TWIFO last week, breaking down some of the interesting stuff going on out there in small cap call skew, in particular the funky 5 Delta stuff. They've been crunching these numbers for a while, and they've never seen anything like it. So if you haven't heard it, check it out over there on TWIFO from last week, last Thursday. Let's go on out to the hot options. What are you guys trading up out there in the single names out there today? Cost you 233,000 contracts to break into the top 10 today. That ain't nothing to sneeze at out there. Usually it's around 140, maybe 150, 160. Today, 233. So a pretty heavy day on the single name side of the options market. That gets us to Intel, the name Mr. Meatball was just talking about. No longer really a huge percentage of the NASDAQ like it was back in the heady days when I was standing out there in the Intel crowd on the SIBO. 233,000 contracts on the tape, good for number 10. Number 9, our old friend GE, kind of a perennial top 10 offender these days, good for 253,000 contracts. Then our friends across the street, Boeing, back in the hunt, 264,000 contracts. Number 7, AMD, 290,000 contracts on the tape. Over 300K now for number 6. That gets us to Pfizer at 312. Then number 5, over 400K already. That's a big jump. To our old friend NEO, 457,000 contracts for NEO. But that ain't even enough for number 4. No. We're almost at 600K already by number 4, listeners. American Airlines, 591,000 contracts. Some of these names are just on fire in terms of volume out here. Number 3, another frequent top tenor of late, just really in the past couple of weeks. This is Palantir, and it's doing some paper. 684,000 contracts, listeners, for number 3. That means the top 2, you can probably guess them. Number 2, Tesla, 857,000. God, Tesla just keeps on giving. It's kind of the new Apple to the brokerage world. Apple's been doing this for a while, but Tesla, one of the newer additions, and it is given some paper out there, but it can't top the number 1 big dog out there today, Apple. 887,000 contracts on the tape. Let's scan really quickly what's the most biased paper out there. Let's see if you can guess. If you guessed Pfizer, you are correct with 91% of those 312,000 calls, or pretty much 212,000 contracts, 285,000 calls coming on the call side of the ledger there. Only 9% wanted any puts out there in Pfizer today. Interesting stuff out here, but we got to keep on rolling. We're already well past the point of contention as we keep on rolling right on into a real quick odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. We just got so wrapped up in all things volatility and vaccines there in the trading block that we went on for a bit. But it's always fun stuff to parse here. Let's get on out, see what our Eye of Sauron found today in the old odd block, and certainly the biggest single name print it found out there for us today goes back to a name we haven't talked about in a while. This is good old Siri. No, not your iPhone assistant. No, but Sirius XM, ticker symbol Siri, SIRI, trading today a whopping $6.49. A year ago, it was trading a little bit north of where it is right now. It was at $6.87. Then it trended all the way up to, looks like about, where was it, $7.25 or so. Actually, $7.40. And then it sold, that was in February 21st and 20th, so we know what happened after that. It sold off pretty hard. It got down to about $4.11, and then it rebounded, then it sold off again. It's another one of these ones that had a lot of fits and starts along the way. It topped out, guess when, listeners? Yep, June 8th. There we go, $6.52. I don't even look at these charts anymore to know exactly the date where they top out. Then it sold off again down to about $5, almost even in September. And then it's been on the rally pretty much ever since, up to about $6.52. So pretty much hit exactly that level yet again, interestingly, that it hit in June 8th. It hit it again in late November, $6.52. And then it sold off again from there. And we're kind of threatening it yet again right now. But that June 8th top has been quite the resistance, for quite the ceiling out there for some time. Let's see what our Eye of Sauron found out here. Looks like maybe someone thinks we're going to break through that resistance. A 15,000 lot of the Jan 2021, expiring on the 8th, actually. So these are weeklies, which is interesting. So not even going out monthly, but weeklies. 6.5 calls going up for 27 cents. Pretty close to the offer. They were offered at 30 cents out there. There are earnings, but not in this cycle. The earnings are on January 28th. So someone paying up for some calls for size, it looks like, Mr. Meatball, but doing it in the weeklies and avoiding an earnings cycle out here. By the way, if you're wondering, it's about a 35.5 vol that they're paying for these. What are your thoughts on? Looks like someone maybe swinging for the fences, or do you think something else is afoot out here in Sirius XM, sir?
I saw these, and we've seen a couple of huge prints in this name, and someone guessing that there's going to be a big move in this. That was really a surprise. I think they're just looking for a value play on Siri, maybe making a guess that this becomes maybe a hot one for the Robinhood traders, something like that. But yeah, this is absolutely 100% a straight call play. Maybe somebody dumping some stock and buying the calls as some sort of rotation. I mean, Siri's had a pretty nice run here over the last, call it 3 months. I mean, in September, this was a $5 stock, so it's up 30%. So could be someone taking a shot, could be somebody doing a little stock replacement, but it more feels like a shot.
Yeah, the timing doesn't feel like a stock replacement. The timing feels like it's more of a speculative play, and the pricing certainly does speak to the Robinhood crowd. Speaking of Robinhood, we got Mr. Unlimited chiming in the chat here saying, I have a Robinhood account and a Webull, and Robinhood was down today from 9:30 to 10:15. So he says it was down for about 45 minutes. That's a long time to be without access to your capital. Yeah, we've heard that, Mr. Unlimited and others out there. And Robinhood is one of the platforms I've mentioned that has been more affected than others out there. Hopefully they get that under wraps fairly soon, because that's been all too frequent of a complaint from a lot of our listeners. Let's get out really quickly to a few more quick ones here. Then we got to get to Uncle Mike here for some strategery. Next up, a newcomer to the Odd Block. This is Axalta Coating Systems Limited. They make industrial coatings. So there you go. Trading today, a ticker symbol AXTA, by the way, AXTA. Trading today, $28.95, off about 40 cents. A year ago, they were trading 30 and a quarter, so a wee bit north of where they are right now. And then they sold off in the Great Nadir down to $12.92, so they took a bit of a drubbing. And they rallied all the way back up. Again, don't even have to look at the date to look at all these charts. Yep, June 8th, 25.17 they rallied to. Then they sold off again. And they had a challenge for a while until October, where they finally kind of surpassed that June 8th level again. They kind of sold off again. Now they're back on the rally again, like we said, coming into today, 28.94. That's where we find ourselves today. What do we find from our Eye of Sauron? We got the Jan 27 puts going up 3,100 times for 53 cents, so a couple of cents off the bid over there on the Philly for a 33 vol, I should say. So 27, almost two handles out of the money. Not too far out, Mr. Meatball, about a month and change out there. And getting 53 cents for it. Do you have the feel of this is maybe your good old friend, and I know you're Rock Lobster's favorite, the line in the sand, sir? Or you think something else is afoot out here?
No, I think that you're dead on. I think that is exactly what happened.
I will keep an eye on these and come back to them in January, see how our friends, so far, pretty much most, if not all, of the line in the sands we profiled have done fairly well. So if past is prologue listeners, this guy will do all right. We've got time for one more. Another newcomer to, maybe you had talked about this one. Name sounds familiar, but it has been quite some time. This is Brightcove Inc. They are online video platform. They ticker symbol BCOV, trading today 17.5 even, off about 7 cents. This is the name that a year ago was trading, $9.22. So they've had a nice year. They sold off to $5.44 in the Great Nadir, and then they rallied up to about $8 and change until July. It looks like maybe earnings popped them off or something happened there, because they rallied from $8 to looks like $11.64 pretty much overnight. So a nice run, and they've kind of been in this upward trend ever since, topping out pretty much right here, right about 17.5. So at the apex of their 52-week chart here for good old BCOV, aka Brightcove, easy for me to say. Let's see what our Eye of Sauron found. Looks like a 2,000 lot of the Ape 22 halves going up for $1.05, pretty much on the bid out here for about a 60 vol on these bad boys. These are opening, I should say. Earnings are in February next, so there are earnings not in this cycle pretty much, but a little bit of that juice baked in, going out to April this time, though, as opposed to February. So Mr. Meatball, seems like someone overwriting, going out and saying 22 half. Yeah, I'll take that. Actually, I'll take $1.05 for that privilege. I don't mind dumping it at $23.5. That should take away as well from these upside calls here in Brightcove.
Yeah, if you sell these at 105, yeah, $23 you're looking at. If it got there, you're a pretty happy camper, right? You're picking up $5.50 on a $17.5 stock. That's a near 30% return. I would say that's a meafy amount of return to get between now and April.
Yeah, I don't know if the notional amount qualifies as meafy. They're only $1.05, but in terms of premium, it's certainly a 60 vol. That's nothing to sneeze at out there. So maybe something interesting. And certainly this guy will certainly dump the stock many handles higher, plus his buck and change for the calls. So that would certainly probably put a smile on his face if we did get out there. We'll keep an eye on these bad boys, but now it's time to keep an eye on Uncle Mike, because it is Monday. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. He's been waiting patiently, but now is the time for Uncle Mike to come on down from the mountain, stone tablet, and options, wit, and or wisdom in hand. Sir, Mr. Uncle Mike, what is on your mind today? What options, wit, and or wisdom do you have in store for us, sir?
Well, it's the end of the year right now, and one thing that I want to just talk to our listeners about is that as fun as option trading is, the tax man cometh. And so what I want to say is just to kind of go through a couple of things that you may want to look at in your portfolios going into the end of the year, and just some ideas of ways with which just to have just some general tax strategies as you're going around and in this crazy year with which we've had. The first one I want to talk about is a backdoor IRA. Now, these have become very popular with clients or with people that make more money to where they don't qualify for a Roth IRA. And so it's pretty common in the financial world amongst advisors, but I know a lot of our clients or a lot of our listeners are pretty self-directed with their trading. But this is something with which you may want to think about if you make too much money to qualify for a Roth IRA. A backdoor IRA means that, let's say that you just do not qualify for a Roth IRA because you make too much money. And let's say that you're putting away all sorts of money in your 401k at work, and you're getting your deduction because it's a 401k and there's no income limit for deductions on a 401k, but you want to be part of this whole Roth IRA thing. It's really cool. Well, what you can do is you can still open up a traditional IRA even though you're contributing to a 401k at your workplace. Now, that's the good news. The bad news is that you won't be able to get a deduction for that traditional IRA because you make that much money and you're already participating in a plan at work. But what you can do is you can do a conversion to a Roth IRA from your traditional IRA, and that is known as a backdoor Roth IRA. Now, this works really clean and easy if you have a 401k set up, and let's just say that's where 100% of all of your retirement assets are, is in your 401k at work. And with that, doing exactly what I had mentioned works, and you'll get a Roth IRA, and you get it's a backdoor Roth IRA, and that's what it's called. And you can do a Google search on how it works, and it's the same thing, the same tax benefits as just putting money into a Roth IRA to begin with, even though you make too much money to do it. Now, keep in mind, if you have money in a traditional IRA along with a 401k, then there's ratios and there's things with which of how much you can actually put into it, how much you qualify for it. Then it gets a little bit complex. Doesn't mean you can't do it, but it just means it gets a little bit more complex. And this is something that we help clients with, but this is something that you can take a look at. So I would encourage you, if you are higher net worth and you are not able to take advantage of arguably one of the best tax breaks that the government's ever given us, then that's something with which to consider. Now, the next thing that I'd want to encourage everybody to do this time of year is for tax planning. And that what's the new Biden administration going to do? Are they going to raise our taxes? Are they going to lower our taxes? Who knows? But what I would encourage you to do, regardless of who's president for that matter, is this time of year, just kind of take a look at some things and then see where you're at. If you have any losses in your portfolio, let's say that you're hedging your entire portfolio, or maybe hopefully not your entire portfolio, but let's say you're hedging your portfolio and you took some losses on some put options because, well, markets went up. Well, one thing you can do is you can take down those losses, and those can offset some potential gains in some stocks that you have if they're not in an IRA or a Roth IRA for that matter. So that's one thing with which to take a look at. So let's say that in theory, you lost 20 grand in your hedging on your put options, whatever they may be. Well, if you have this stock that you've just been watching go up and up and up and up and up and up and up, and you kind of want to get out of it, now might be the time to do it, because those losses that you have in your put options could offset some of it. So with that, I would encourage everyone to take a look at that. Think some things about your taxes, because of the fact that you don't have much longer to do it. It is December, but I would encourage everybody to start thinking about that. And that is my strategy for today.
Thank you for that, Uncle Mike. Yes, the tax man cometh, and your questions are coming, and indeed cometh. Let's see if we can squeeze a few of you in, a little bit of the old quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the mail block out there. Looks like Mr. Unlimited still chiming in the chat. He likes your backdoor Roths strategy block there, Uncle Mike. I like that. Maybe that's the strategy you can call it when you talk to your clients there, Uncle Mike. Backdoor Roths. All right, looks like a bunch of people have questions about selling premium out there right now, which is kind of, I love the trends our audience goes through over time. Let's go to this one from Ferdinand. Ferdinand wants to know, if I were to sell a LEAP, aka 1 year plus, he puts in parentheses here, a far out of the money, he puts in parentheses, over 30% plus call, and the same date out of the money percentage put, wouldn't I pretty much have a 80+% chance of making a profit? I could just collect the premium I sold for and live happily ever after, correct? So he wants to sell a LEAP 30+% out of the money call, and then the exact same month expiration percent out of the money put. So a 30+% out of the money put. So he wants to sell a LEAP Strangle 30+% out of the money. Would you have a 80+% chance? Well, yeah, usually in a quiet year, 30+% out of the money strangles probably have a decent chance of working out. Of course, 2020, hardly a normal year. We've had huge swings, so 30+% probably wouldn't do it. You get taken away. You're going to have naked short units on both sides of this equation, which is never something we really advocate for. On the put side, of course, long as you're picking a strike, you're comfortable buying something, a 30% discount to the S&P. I think a lot of people might think about nibbling at those levels, so that isn't too scary as long as you have the capital put away. On the upside, though, your broker's going to tie up a lot of capital for a naked short call on just about anything these days, because obviously there is no limit to how much you could lose on that strategy. So maybe you might want to mitigate that with some spreads, or maybe consider something else along those. But it sounds like let's go to the meatball first. Mr. Meatball, Ferdinand here is discovering the joys of selling premium, and he wants to know our thoughts on a 30+% out of the money leap strangle, sir. What are your thoughts on that?
I mean, how can you lose, right? I mean, if you were going to tell me that, like, hey, the NASDAQ will never rally 30% in the year, or the S&P will never do something crazy like that, and we'll never see a day when markets drop 1,000 points, then, it makes total sense. It makes sense in theory, but when you do these naked strangles, there's this thing called margin, and when vol blows up and those strangles go up a lot, there can be a lot of pain associated with having those positions on. I have found that those types of strategies make a ton of sense when we've gotten a crazy VIX move or vol Q move and we're in the 40s and 50s. It's maybe not a bad trade here if the VIX is heading from 2165 back down to 15. But when we get into a real low vol period, you're picking up pennies in front of a freight train.
Yeah, people always forget the margin component to this. I think it's just free money. I'm going to collect, as he says, they collect the premium and I live happily ever after. But there's a lot of other opportunity costs and lingering. That capital is tied up for a year. You can't really do anything else with that. Mr. Uncle Mike, I'm going to go out on a limb and think this is not perhaps your favorite trading strategy, sir.
You would be correct. Whenever you're doing something like that, yes, you do have that issue of the margin that can get tied up, because ultimately volatility is a factor in option pricing. And if you get a vol spike, then you could get a margin call and it could screw a lot of things up. But I think that the ultimate risk on that, of course, is if you get a large movement in the underlying. And if you were to get something like that, how do I put this? It typically doesn't end well. And I'm willing to bet, I've never met one, and I'm willing to bet that neither of you guys have either. Have either of you guys met a lifetime successful 30% out of the money strangle seller that has been able to consistently generate profits for years and years and years?
They are few and far between. I used to know a lot of premium selling teeny guys out there in the S and things. They used to have the fun characteristic of changing jackets every year or two out there, which meant they pretty much blew out every couple of years, their listeners. So it's a strategy that works until it doesn't, and you got to have that plan for when it does. By the way, this year is one of those years where it doesn't work there, Ferdinand. Peak to trough, just the SPY alone, 60% rally or so. So your upside calls are looking pretty crazy if you sold them anywhere near the nadir down there. So yeah, this has all sorts of unintended consequences that perhaps you didn't think through. This is one of those strategies that sounds so good on paper. What can go wrong? And then you start digging into it. You start slicing away the layers of the onion there. And it gets a wee bit more complicated as we keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we break down what the heck is popping off throughout the rest of the week until we can gather here together back on this show, at least on Thursday. Obviously, a lot of shows on the network between now and Thursday for your listening pleasure. If you'd like to sink your teeth into some straightforward earnings volatility, still some big names popping off for you. You've got Chewy, everyone's favorite. Online pets, obviously, after the bell on Tuesday. GameStop, one of our ones that was in our infamous GameStop versus Bed Bath & Beyond poll. And you guys kind of overwhelmingly chose GameStop. And it seemed like Bed Bath & Beyond was the good choice early on. Then GameStop had a bit of a rally with that old Microsoft. Let's see where they're trading right now. See how that is looking out there. Of course, no one can get a PS5. Maybe that's weighing on them these days, but still looking a wee bit higher than they were, at $11 and change at the beginning of November, now 16.5. So a good little run for good old GameStop of late. Campbell's Soup on Wednesday, as well as Vera Bradley. All you ladies who like your loud floral prints That's one for you to keep an eye on. Thursday, Costco. We got Lululemon. If you ladies like your sheer yoga pants, that's one to keep an eye on out there, as well as Oracle and Dave & Buster's. Let's break down a couple of them really quickly. We have earnings move reports for all these names over there at theoptionsinsider.com. Chewy, they're on the 8th after the bell. They're pricing in, let's see, they're at about $75. They're pricing in $7.38. In the past, they've moved $4.56. Looking juicy, which we all know how well that works out right now. Costco, they're at $3.73.5. Nice and rich in Costco land. They're pricing in $11.25. In the past, they moved $5.50. A little bit of extra juice in Costco as well. Lulu, let's see if they're bucking the trend or not. $3.77 for Lulu. Wow. They were pricing in $26.67. In the past, they've moved $32.50. So maybe someone learning from previous earnings announcements here over the past couple of cycles. Oracle, $59.96, making some headlines with their Slack acquisition. They were pricing in $2.84. In the past, they moved $3.20, so a little bit light on the Oracle front as well. It's just a few of them. There's a lot more you guys can sink your teeth into over there. TheOptionsInsider.com is the place to go. Now let's go back around the horn. Let's start with the greasiest of meatballs. Sir, what are you keeping an eye on for the rest of this week until Thursday?
You know, I want to know what's going on in Congress. Are we going to get the relief bill? It's up in the air. I think that's why markets are down a little bit today. But if we get a relief bill, you could see a pretty strong rally in some names over the next day or two. I led at the top of the show telling you about the airlines. Part of the reason why they're so hot is because they're going to receive some relief. I think that could be a very interesting trade for a name like GE. They're going to do really well if we do get some sort of relief package. I think that stock could go back to 15.
There we go. Uncle Mike, same question for you, sir. What are you keeping an eye on for the rest of this week until Thursday?
COVID numbers and 3,700 on the SPX. Those are the two main things.
There we go. And unfortunately, that music means that's all we have time for, at least for this episode of the old option block. If you like a little more in your ear hole, stay tuned. Coming back at you a different time. Usually we're back at you within about an hour of this show for the Crypto Rundown. Coming at you 2 hours after this show. So it's going to be 3 p.m. Central, 4 p.m. Eastern. Listen after the fact to sit next on your device of choice out there. We'll be at you with the Crypto Rundown. Obviously a lot of vol going on out there in the crypto options and derivative space these days. We'll be joined by the folks over there at ErisX, one of the leading crypto exchanges out there to parse this explosion of vol and skew and everything else we're seeing out there in the world of crypto. So stay tuned for that 2 hours after the old OB instead of 1. But before we go, let's go back around the horn. Let's start with the man holding down our NASDAQ hot seat today, the greasiest of meatballs. Sir, if folks are intrigued, maybe they want to hit you up with questions about, use cases for VolQ versus VIX, or they want to learn about your Little John product or anything else they have on their brain. Where should they go? What should they do?
Yeah, go to optionpit.com. Make sure you're a member of our email list because we put out great volatility content and trading content every day.
There you go. Optionpit.com is the place to learn more. And Mr. Uncle Mike, if folks are intrigued, they want to learn more about what you guys have cooking over there, where should they go? What should they do?
stcharleswealth.com. If you'd like a financial advisor who can talk to you about backdoor Roth IRAs as well as options.
There you go. stcharleswealth.com. And, of course, you know where to go to learn more about all things VolQ. It's just NASDAQ.com/VolQ. That gives you all the info, the data, a lot of these articles we were just talking about, different ways to use them from a strategic perspective, covered call writing, single-day iron condors, a lot of interesting stuff. NASDAQ.com/VolQ is the place to go to begin your journey. On behalf of the greasiest of meatballs and the uncleest of Mikes and our friends over there at NASDAQ and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live, for all the other fun stuff that you guys do. Keep it coming. Remember, we'll be back in exactly 2 hours. Talk all things crypto. Back again tomorrow with another great interview. Tuesday, Education Wednesday. Got OPR and Boot Camp coming at you. Double dose on Wednesday. And then right back again here on Thursday for another episode of The Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.